Preparing for a Banking at Doha Bank interview? You've reached Candy Mentor, and this video is for you. We'll walk through 15 key questions you're likely to face. For each question, you'll see a sample answer, followed by the key points to cover. Subscribe, like, and share. And drop a topic request in the comments. Question 1. Tell me about yourself and why you want to work at Doha Bank. I would keep this answer focused and commercial. I have built a strong foundation in banking, finance, and client service, and I am comfortable working with numbers, controls, and deadlines. Doha Bank attracts me because it is a well-established Qatari bank with corporate, retail, treasury, and international exposure. I would position myself as someone who can support growth while protecting risk standards, which is exactly what a bank needs in a competitive market. While answering, focus on relevant banking exposure, customer or analytical strengths, knowledge of Doha Bank's Qatar and regional presence, and a clear reason connecting your skills to the role. Question 2. What do you know about Doha Bank? Doha Bank is one of Qatar's established commercial banks, serving retail, corporate, SME, treasury, and international banking clients. I would mention its role in supporting Qatar's economy, trade flows, and financing needs, while operating in a regulated environment under the Qatar Central Bank. The key point is not just listing facts. It is showing I understand the bank earns through lending, fees, treasury activity, and disciplined risk management. Make sure to cover Doha Bank's position as a Qatari commercial bank, its retail and corporate services, regulated environment, and how banks earn through lending, fees, and treasury. Question 3. How does a commercial bank like Doha Bank make money? A commercial bank's core revenue starts with net interest income. It lends at a higher yield than it pays on deposits. Beyond that, banks earn fee income from cards, trade finance, remittances, account services, wealth products, and guarantees. Treasury can add income through FX and investment activity. In an interview, I would also stress quality of revenue, because aggressive loan growth is not valuable if it creates future impairments or liquidity pressure. In your answer, talk about net interest income first, then fee income, treasury activity, and why sustainable revenue must be viewed alongside credit quality and funding discipline. Question 4. What is net interest margin, and why is it important for Doha Bank? Net interest margin measures how efficiently a bank converts its earning assets into net interest income. The formula is net interest income divided by average earning assets. For Doha Bank, higher funding costs, deposit mix, loan pricing, and interest rate changes would directly affect NIM. I would explain that a strong NIM is useful, but it must be assessed with asset quality and liquidity, because high-yield lending can hide elevated credit risk. While answering, focus on the NIM formula, loan yields, deposit costs, rate movements, CASA mix, and the need to interpret margin together with asset quality. Question 5. How would you assess a corporate loan application at Doha Bank? For a corporate loan, I would start with the borrower's business model, industry position, ownership, and purpose of borrowing. Then I would analyze financial statements, cash flow coverage, leverage, collateral, repayment source, and account conduct. The key is separating capacity from security. Collateral helps recovery, but cash flow repays the loan. I would also consider concentration limits, covenants, and whether the pricing adequately compensates Doha Bank for the risk. Be sure to mention borrower analysis, purpose of facility, cash flow repayment, collateral, covenants, industry risk, account conduct, and the difference between repayment capacity and recovery security. Question 6. Explain International Financial Reporting Standards 9, Expected Credit Loss in a Banking Context. International Financial Reporting Standards 9 requires banks to recognize expected credit losses before an actual default occurs. Stage 1 covers performing assets with 12-month ECL. Stage 2 captures significant credit deterioration with lifetime ECL. And Stage 3 covers credit-impaired assets. I would connect this to Doha Bank by saying that accurate staging, forward-looking macro assumptions, and timely data are critical, because ECL directly affects profitability, capital, and how management views loan portfolio quality. Make sure to cover the 3 International Financial Reporting Standards 9 stages: 12-month versus lifetime ECL, forward-looking assumptions, and why provisioning affects profit, capital, portfolio quality, and reporting transparency. Question 7. What is capital adequacy, and why does it matter for a bank? Capital adequacy shows whether a bank has enough capital to absorb losses relative to its risk-weighted assets. Under Basel frameworks, credit, market, and operational risks all affect required capital. For Doha Bank, strong capital supports lending growth, depositor confidence, and regulatory compliance. I would also mention liquidity ratios such as LCR, because capital protects solvency while liquidity protects the bank's ability to meet withdrawals and funding obligations. In your answer, explain risk-weighted assets, regulatory capital, Basel principles, credit and operational risk, liquidity coverage, and why strong capital supports confidence and lending capacity. Question 8. What is a non-performing loan, and how should a bank manage NPLs? A non-performing loan is generally a loan where the borrower is significantly overdue, often 90 days past due, or unlikely to repay without enforcement. I would explain that managing NPLs requires early warning signals, restructuring when viable, collateral review, provisioning, and recovery action. The interviewer wants to hear discipline. A bank should support genuine clients, but it cannot delay recognition of deterioration because that weakens earnings and capital transparency. While answering, focus on overdue status, unlikely to pay indicators, early warning signals, restructuring, provisioning, collateral recovery, and why timely recognition protects earnings credibility and capital transparency. Question 9. What is CASA, and why is it important for Doha Bank? CASA means current account and savings account deposits. They are valuable because they usually provide cheaper, stickier funding than term deposits or wholesale borrowing. For Doha Bank, a stronger CASA base can improve net interest margin and reduce funding risk. I would add that growing CASA is not only a pricing exercise. It depends on salary accounts, digital convenience, SME relationships, cash management, branch service, and trust. Be sure to mention CASA definition, low-cost deposit funding, impact on NIM, deposit stickiness, liquidity stability, and practical ways banks grow operating accounts and salary relationships. Question 10. What KYC and AML checks are important when onboarding a banking customer? KYC and AML controls protect the bank from being used for money laundering, sanctions breaches, or terrorist financing. In practice, that means verifying customer identity, beneficial ownership, source of funds, transaction purpose, and ongoing account behavior. At Doha Bank, I would expect strong compliance with Qatar central bank rules and international standards. I would emphasize that good onboarding is not a formality. It protects reputation, regulatory standing, and the safety of the financial system. Make sure to cover customer identification, beneficial ownership, source of funds, sanctions screening, transaction monitoring, regulatory expectations, and the reputational risk of weak compliance controls. Question 11. How would you handle a dissatisfied customer at a Doha Bank branch or contact point? I would first listen without interrupting, confirm the issue, and show ownership even if I cannot solve it instantly. Then I would check the facts, explain the process clearly, and escalate where policy or authority requires it. In a bank like Doha Bank, customer service must balance empathy with controls. I would never promise something outside policy, but I would keep the client updated until closure. In your answer, show empathy, fact-finding, escalation discipline, clear communication, policy awareness, and how you would protect both customer experience and banking controls under service pressure. Question 12. If asked to analyze Doha Bank's financial statements, where would you start? I would start with the balance sheet, because banking is balance sheet driven, loan book, deposits, investments, borrowings, and capital. Then I would review income quality through net interest income, fee income, operating costs, and impairment charges. Finally, I would assess asset quality, NPL ratio, coverage ratio, liquidity, and capital adequacy. For Doha Bank, the story is whether growth is profitable, well-funded, and supported by disciplined credit risk management. While answering, focus on bank-specific financial analysis, loan book, deposits, NII, fee income, impairments, NPL ratio, coverage, liquidity, capital adequacy, cost efficiency, and trends over time. Question 13. What trends in Qatar's banking sector should Doha Bank pay attention to? Qatar's banking sector benefits from a strong sovereign backdrop, infrastructure investment, energy-linked activity, and growing trade and corporate financing needs. At the same time, banks face competition for deposits, interest rate sensitivity, digital disruption, and credit discipline requirements. I would frame my answer around balanced optimism. Doha Bank can benefit from economic momentum, but success depends on prudent lending, strong compliance, efficient operations, and adapting to changing customer expectations. Be sure to discuss Qatar's economic backdrop, energy and infrastructure links, corporate lending demand, deposit competition, digital change, and the importance of prudent growth discipline. Question 14. How can digital banking create value for Doha Bank? Digital banking matters because customers expect fast onboarding, instant payments, mobile servicing, and fewer branch visits. For Doha Bank, better digital channels can reduce cost to income, improve customer retention, and generate useful data for cross-selling and risk monitoring. I would also mention cyber risk, operational resilience, and fraud controls. The best answer shows both sides. Digital transformation is a growth opportunity, but only if security and reliability remain strong. Make sure to cover customer convenience, cost-to-income improvement, data-driven cross-selling, faster servicing, cybersecurity, fraud prevention, operational resilience, and why digital growth needs strong controls too. Question 15. Where do you see yourself in the next few years at Doha Bank? I would answer with ambition and realism. In the near term, I want to become fully reliable in the role, understand Doha Bank's products, systems, policies, and customer expectations. Over time, I want to grow into a banker or finance professional who can handle larger responsibilities, mentor juniors, and contribute to process improvement. I would avoid sounding impatient. Banks value stability, trust, and consistent performance before promotion. In your answer, balance ambition with stability, showing willingness to learn systems, follow controls, serve customers, grow responsibility, and contribute before asking for promotion quickly. If you are still with us, congratulations. You are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.